Good morning and welcome everyone to the Automate Trading webinar for beginners. My name is Danny and I will give you the webinar today. And we will open the webinar, as I said, with an introduction to the company. So as many of you know, we're here since 2006. We have 9 licenses worldwide, and our customer service is right here to assist you with any question or query right here at the bottom left. I'm going to repeat what I said about this interface. This interface is called the Web Trader. Okay, the Web Trader. And we also have it in the app. It's called the AvaTrade Trading app. Of course, in the app, in your phone, it might look a bit different than in here in the computer, but we get to use similar features, and that is just great. So as I said, in case you got any question or query, you can contact our customer service. If you're using a different interface like MT4 or MT5 or any other interface, and you would like to contact customer service directly and not via the live chat right here, you can simply send an email to cs@avatrade.com. Apart from that, what if you have a question about trading or anything under the trading's umbrella, such as risk money management or help with a strategy or analysis or anything like that? So you can contact your senior account manager, and he is the go-to person for all of the trading questions. So as I said, strategy, analysis, risk money management, calculations, anything on your mind regarding trading, he is the go-to person. And we've got CS on the other end to give us full support with customer service. Okay, we're going to carry on with the Web Trader. That's what we're going to do the webinar on today. But still, I would like to list down the other platforms that we have, such as MT4, MT5, the AVA futures and AVA options, and lastly AVA social, which we're going to say a few words. As always, this is a webinar for beginners, and it would make sense to speak about AVA social. And the reason for that, maybe we'll split. Okay, never mind, we'll keep it like this. Okay, and the reason for that is with AVA social, what you can do is you can either copy or follow another trader. Now, how is this useful? Well, since as a beginner, I'm not always sure what my next move is going to be, my strategy, if it's good or not, or basically, I don't always have the specific indication of how to do things. So in AVA Social, we get the opportunity to follow or copy another trader. The way that it works is very, very simple. So the difference is, let's suppose that we're trader A, we would like to follow trader B. What will happen in this case as trader A, we will get notifications about the position that trader B is taking. This way, we can take the message and maybe trade it exactly as we received it, or maybe modify it, maybe increase, change the lot size, change any of the things that we see on the message. But the point here is that we get information of what trader B is doing about a strategy, and we by ourselves can open the positions similarly or not. From the other end, we have copy. What is the difference? In copy, we don't have to open the positions by ourselves because it will open and close automatically based on the on what trader B is doing, based on his strategy. In other words, what happens practically is that we can link the account between my account and trader B's account, and it will run similarly just like trader B's account. However, what if I would like to copy someone else with a different balance? So for instance, currently in my account, I have $10,000, but the person that I would like to copy has 20 or 30, as an example. What can happen in this case is naturally he might take a position that my account might not be able to withstand, since he has more balance than I do. Therefore, he has more margin than I do. In this case, what I can do is I can adjust the lot size to fit to my needs. This way, I can still copy the strategy, but with a lower lot size. It gives me the ability to contemplate and judge whether if the strategy is good for me or not. And also, as I said, use the strategy with lower margin, which I find extremely useful. The app itself is free, completely free to download. So of course, whether if you're a beginner or not, still I would recommend to explore it as well. And yeah, that's it regarding the app. Is very, very straightforward. We also have a nice video on the website that shows the functionalities and how to maneuver in the app. Really, really great. If you've got any questions until this point, guys, feel free to fire away, as I am moving in a certain pace. But as I said in the beginning, this is a live webinar. You're all welcome to send any questions you've got. Okay, we're going to carry on with ease. We summarized the valuable platforms that we have. Like I said, we're going to carry on with the web trader for the rest of the webinar. It's, as you can see, usually it would look either like this or with the chart folded down. You can easily click here on the toggle and maybe customize it the way that fits, that looks right. Or you can click here on the arrows to expand the chart all the way up. What we're going to do is we're going to look at the menus displayed to the left, and we'll understand what happens, what we've got in every menu. So at the top left, we've got the personal details. In here, we can create a sub account and we can manage our personal details. In here is trade, is where we are at right now. In here, we can trade. Positions speaks by itself. Same apply with orders. We can modify all of our orders, pending orders, and so on. Underneath in history, we can click and choose the range of the history that we would like to display. In here is the signals. We do want to speak about it a little bit, just maybe to understand the procedure here, nothing too crazy. We can see, so basically there are two ways to access the signal. One is through the signal section itself, just as we are doing now. But if I'll click here on AvaTrade and go back to the default screen, we can see that we have this similar icon right here by the instruments. This icon is to show me that those instrument has a signal currently. So if I'll use the CAD Japanese yen as an example, and we're going to click here on this blue thingy, then we get to open the signal information. And we can see that there is pre-made analysis in here, support and resistance. We still don't know exactly what it means, but it's okay. We're going to go through that in a moment. But to use the signal from the outside, it's really simple. We can click in here, and we can click in here, choose which scenario we want, maybe go with the buy now, and we are basically good to go. Okay, we're good to go. We've got the take profit and the stop loss applied, set for us. Now we're going to understand what it means. We can collapse this and can carry on with ease. Now, if I'll do it through the signal section, there is a small difference because in here, I can only know when the signal was produced if I'll click on the signal, and then I can see when it was produced. Okay, why does it make a difference if a signal was produced just now, the analysis was done now, or the signal was produced 5 hours ago or 6 hours ago? What do you think, guys? Is there a difference? Is there a difference between using a signal that was just analyzed, or I think we can maybe clean the slate in here and maybe leave only that for the time being. Okay, so my question to you guys, at the moment we can see that the signals are listed with from the newest to the oldest. So the oldest will be found at the bottom of this list. So this is the newest, right? And there is a difference. We're not going to speak too thoroughly about it, but of course, since the market is alive and it keeps on moving, of course, there is a difference between a signal that was just made to a signal that was made a few hours ago, since the analysis might already fulfilled. So if we click on NASDAQ as an example, before we do that, we would like to just go through the signal section, how it's constructed. So we've got the buy here excellent. Sometimes it's a buy, sometimes it's a sell. When I'm using a buy, when I'm placing a position with a buy, it means that our intention is that the value will keep increasing. With a sell, it's the other way around. Our intention is that the value will decrease. So if we click on view signal, we see that it opens with some analysis in here. Great. And at the moment, we can see we've got the type, we've got something called stop loss and take profit and entry. Okay, entry price and signal produced. Okay, we saw that this is the date. Now, how does that work? So at the moment, we can explain about take profit and stop loss. Maybe we can just basically look at what's happening here. There are some lines here, resistance, support. Okay, we can even leave a note here, right here, resistance. Okay, and in here we're gonna write support. Okay, great. And we can basically match the just a sec. Okay, so we can basically match the lines that we see in here to the lines that displayed in the picture. We don't have to do that. It's not mandatory in any way, but we can absolutely do that if we want and further have additional analysis on top of the signal. As you can see, the lines that I've placed in here are not even close to the lines displayed on the picture. The reason for that is the time frame that we're looking here is actually minutes. We can click in here at the top left, we click, we see that 1M is selected. We can scroll down and click on 1 day. As you can see, if we click on 1 day, if we can click on 1 day, then we get a bit bigger picture. There we go. And then in here, okay, we have to clean what we've placed. And then in here, we can get the same levels as is in the picture. I'm going to repeat what I said a moment ago. What I'm doing now is for the purpose of this webinar, and it's not mandatory in any way to do this procedure while using the signals. Okay, what I do now is simply I match the levels that is on the picture, and I could do it some more and have my analysis. But if I want to use the signal, plain and simple, what I can do is click here on view signal. Okay, and in here, choose the scenario, maybe stay with a buy, and here we are. We're good to go. We can launch the signal just like that. It's let's speak a little bit about take profit and stop loss. So we've got market execution. Okay, buy or sell by market now, and we have pending orders. Now, pending orders is divided to a pending buy or sell, which could also be interpreted in MT4 and MT5 to a buy limit or a sell limit. And in here, we've got take profit and stop loss. We've got execute when price hits, which does the same thing. So basically, what take profit does is it closes the position automatically with a profit, closing the position automatically with a profit when reaching the price. Let's extend it a little bit. And the stop loss does the same thing with a loss. Okay, and what the execute when price hits does, pending buy or sell, so that will be execute when price hits. Now, this means that at the moment, this position can be fully automated with those pending orders. That means we can automate the entry, we can automate to close with a profit and to close with a loss. Great. So what the signal is giving us is basically pre-made analysis that we can just select. Maybe I'll take FTSE now, and again, selecting which scenario we want. We click here on buy again, and we see that we are good to go. We have the values set for us. We can click here buy and we are good to go. Of course, we can along the way modify whatever we want, increase the lot size or modify the values here, like I said, further analysis, but it's not necessary in any way. And you can see that I keep using the signals. It takes me exactly 10 seconds to launch one. Maybe we'll take, this is by the way what I've explained in the beginning about the importance of taking a signal from a few hours ago to a signal that was just made. So if we're looking at crude oil as an example, and we see that there is no stop loss and take profit displayed in here, okay, since this field is blank. Why is it blank? Because if we click here on view signal in here, we can see that the market has already reached a key level. Okay, so we've examined several signals. We saw in the beginning NASDAQ, afterwards we saw FTSE, and now we see oil, but in oil, it doesn't let us use the signal. Okay, why is that? Because the analysis that was made in here, and upon that we have the take profit and the stop loss, that already happened. Those levels already happened, which makes this signal futile. So even if I'll go with the original recommendation of a sell, it's still not going to let me show you. Click here on sell. It doesn't let us do that, okay? Because the market has already reached the analysis that was made. Okay, great. If there are any questions, as I said, about the signal section or anything that I said so far, feel free to fire away. And in the meantime, we are going to carry on with the menus to the left. It's also important to understand that the signals that we get are not manufactured by AvaTrade. They are made by the Trading Central, which is a three-party vendor. And if we speak a little about the analysis that was done here, since it's based on support and resistance, we can categorize that as a technical analysis. So we've got two types of analysis. We've got technical analysis and fundamental analysis. Okay. Yeah. And the way that it works is very, very simple. Technical analysis is basically everything accumulated in the charts. So we can pull the averages and we can have the certain levels of support and resistance. And we can also find certain pivot points, right? And we also have certain percentages that helps us find the patterns, right? Okay. So this is great. So this is basically our how. This is how things are moving. How far up, how far down. There is a question here from Celane. Is it necessary to change or put in your stop loss? Stop loss and take profit are not obligatory to use. They can help automate your position. Okay, so the oh, maybe you meant the signals. I apologize. I wasn't sure if Celane, you have to help me with if your question was referring to signals or referring to stop loss and take profit in general. Okay, because the reply to you was in general. In stop loss and take profit, in the signal section, it's placed automatically. Okay, as we saw, if the signal is valid, if we click here on gold, so and we click buy, so it happens by itself, right? We saw that. We saw that, so we don't have to change anything. If we don't want to, we don't have to change. But overall, in general, you don't have to. We don't have to use. Okay. So I was explaining about technical analysis. As we can see, this is basically everything accumulative we can withdraw from the chart. So we've got averages, levels of support and resistance, pivot points, Fibonacci, and more. And fundamental analysis will be the other way around. So articles, news, decisions, any kind of reports, and God forbid wars and things like that. And this is basically the why. Now, when we combine the why things are moving with how things are moving, we can get more accuracy doing our analysis. How does that work? So for instance, we see that gold at the moment has been quite shaky. And we can see that if we switch quickly to the weekly chart, we can see that generally the trend here is quite positive. And we can even use a funnel here to help us. Okay, never mind. We will get back to that. Okay, we'll get back to that. But the point here is that analysis that was done on that can be done on the chart can be combined also with what's happening with the news. So how can we combine them? We can click here on the news section as an example. We can find different categories, and in here we can, this is also provided by the Trading Central, and in here we can also see several different articles in here. We can see that this is the pre-European market brief, and underneath, if we scroll down, underneath we've got 4 related instruments, and among them gold. Okay, great. So we get the statistics, the numbers, we get them from the chart, and the news we can absorb from different variety of sources. One of them is also the news section. Another way to do that is also in here under the news section, under discovery. We also have market buzz, and let's see, I saw that the stop loss and take profit was automatically inserted. Would there a point there I need to determine on my own? Only if you want. This is optional. I understand a bit better what you wrote. Okay, let's see if I can reply to you, if it lets me. Okay, using the signals doesn't require you to design stop loss and take profit as they are placed automatically Okay. Now I understood a bit better, because the first reply was based, I thought that you asked in general, but now I wrote back, using the signals doesn't require you to design stop loss and take profit, as they are placed automatically from the analysis made on the signal. I forgot the T there, but you'll have to forgive me on that. Okay, so at the moment, if we with pleasure, and like I said, guys, any questions, feel free to fire away. So as we can see, when we speak about fundamental analysis, and at the moment we are using the buzz, market buzz, we see we've got here some bubbles here. We can also align it like a table. Great. We can select from what's at the top. Naturally, if we're using the bubbly concept, NVIDIA is right here in the middle with 3,107 mentions. We can also find other things in here, Tesla and Mullen and other SharpLink. Okay, if we click here on NVIDIA, it takes us to the page. And in the page, we can see the changes in price. We can also find here news. Okay, so similarly, not exactly similarly, but like we saw in the news section, in here is more specific, and it's specifically for Tesla, for NVIDIA. Now, using this allows me to basically filter which news I would also like to read. I don't want to read all those articles and waste Okay, what I want to do is specifically maybe target the IPO. I want, or maybe the review increase. So if I want to focus on IPO, and we see now that we get articles related to IPO, and I click here as an example, we can enjoy specifically this type of article. So in the same way I'm doing the technical analysis and I choose which indicators to use and how to align the lines on my chart and the all kind of different parameters that I place on the chart. Similarly, I can choose how I'm doing the fundamental analysis. I can Google to get more information. I can use the news section. I can use the market buzz. Another way to use it is also to click on the economic calendar. This is another feature in the website. And in here, I can get a bit more information about more official governmental decisions. So as we wrote, there are reoccurring reports, monthly reports that we can also add to our analysis. At the moment, by default, it displays everything. We've got all variety of flags here, which we don't necessarily need. But how we can filter that is very easily. We can click on today and we can click on a week forward. And as we can see this blue trail, now we've selected those dates. The next thing I want to do to filter only the specific countries that's relevant to me is to click on the arrow and select which flags. Maybe I'll focus on US and the Aussie dollar. And at the moment, we can see that this is the only things that are displayed. Now, furthermore, if we're looking at the tabs at the top, we see that we've got the time, the country, and the event. And to the right, we've got the previous result, the expected result, and the result. And of course, how strong we think that this event will impact the market. We've got a question here from Vincent. I don't have access to the market buzz, even in the demo. What you need to do, sir, is you need to contact your senior account manager. Okay, if for any reason you're not able to access that, you can contact your senior account manager and he should be able to assist you. All right. Now we can filter that out. We can filter that out by clicking on any of those. So let's suppose we want to focus only on the high impact events. So we're going to click on high. Only high is displayed at the moment. And we can see that we don't have the actual. Of course, we don't have the actual because those things didn't happen yet. So how can we know the result? We can't. But if we click on the maybe on yesterday, okay, and we begin from yesterday, we see that those are the results from yesterday, and we do get the actual. So this red, there is this red line here that separates what happened to what is still not. Okay, and when we see the actual, we know those things are also a little grayed out. I don't know if you guys can see it on my screen, but that segment is a little more grayed out. In here, the white is a little brighter. Okay, so this is basically how we can filter everything. I can click on something to get more information about the specific event. And one more thing I would like to say before we get to the second segment. I know, guys, that you want me to already get the practical part. So one last thing, and this one last thing is to be able to add the event onto your calendar. So just like that, you can click here on the tiny icon here, add to calendar, and you can add it to your calendar. I mean, what's more amazing than that? You get a reminder in a specific time. You can do the analysis, see the results, go to the market, do what you want to do. That's just amazing. Instead of thinking when it will be during the day, you can book it to your calendar and align it with your strategy. It's great. I really recommend using it. Another question here, there's a lot of information on financial analysis, which are the specific fundamentals would be the deciding factor. You'll have to specify your question, sir, for me to help you a bit better, unfortunately, because I want to give you a direct answer. And this question is a bit too wide. Now, what we're going to do is we will begin the second part. The second part can be done with, let's maybe clean everything we have in here, and maybe we'll put the name of our instrument. I think gold was pretty interesting, right? When we briefly saw it on the signal section. So there are two ways to open an instrument. One of them is manually on the categories. So we can go to commodities, we can go to metals, and in metals, we've got gold. Another way that we can do it is we can do it on the search bar. In here, if for instance, I will I'll search gold like this, and I'll click it from the list. We've got, I don't know if you noticed, but we've got the previous instrument still displayed in here. So what you want to do is you want to first either close this or click buy or sell to open the right instrument to display. The next thing I'm going to do is I'm going to delete the lot size and place 0.01 instead. The reason doing that is because we can always increase to what lot size we want, and this is basically the default minimum in my system. There is a question here, are we going to get recording to refer back? It's not giving all the time. I'm not sure. Both Ainura, please, maybe if you can specify your question, this will be great. And Tilidi Z, how are we going to get a recording? Unfortunately, you're not going to get the recording sent to you. You will have to visit our YouTube channel. So I'm just going to quickly reply to you. Okay, unfortunately, the recording here is not going to be sent, but you can easily access our YouTube channel, and there you can find the recordings. Now, as I have explained, after I choose gold and I clicked buy or sell, we have here the lot size, which we've changed to 0.01, so we can always increase. Next thing that I'm going to do is I'm also going to write here gold. Now, with gold in mind, with the trend in mind, just a second. We also want to go through the menus in here to know how to customize the chart to capture a specific area in here. So we've got gold. Next thing we have here the time frames. We're already familiar from the signal section that there are various time frames. And when I switch the time frame, that basically switches the picture that we see in here. And at the moment with 1D, that means that each day, each candle here is a day. How can I validate this? I can validate this by clicking here on the arrow and enabling the crosshair. With the crosshair, we can see that if we point on each candle, we do get the date, and the dates are changing day by day. You can see how the date is changing, just 7th, 8th, 9th, right? If we change to weeks, so now each candle is a week. And I can click here on the column price and squeeze the chart up and down to make it a bit more comfortable for my eyes doing the analysis. And if I'll maybe stay with weeks and maybe click on in here to get some lines, just before I do that, I also wanted to tell you guys, you can split the chart and have multiple charts inside this chart. So I can have 2, I can have 3, 4, Okay, indicators, I'm not going to explain about it now because we're going to use it anyway in a moment. But in here, what I can do is I can click here on the tiny arrow, select one of the lines, then click again and place it on the chart. Another way for me to do that, as you can see, when I placed it on 3,500, we have this by the dot 4.46 after the decimal. We can flatten that out, delete that, and maybe click save. Okay, maybe we'll keep it green. We'll keep it green. We'll have another one line, place it right here. This will be our support. Another one here, and another one a bit farther down, even though it's a bit okay. We'll keep it like this. I don't want to make it too complex anyway. So as we can see, we're somehow in the middle. We're also going to flatten that out, of course, and we are great. Okay, great. Now we've got those green line and red line. Okay, we can assume in the moment, since I'm looking at gold, and we can all we can all understand that the trend here, the general idea here is buy, is bullish. And we can see that it grew by 40% from where it's at on December. So we can see that the price here is changed quite considerably, which gives us the reason to think that it might be a buy. This doesn't obligate me in any way to buy now. As I said, I can automate my entry and choose another price. Now we're going to get rid of some things here so we won't be confused, and we're going to keep only two lines. We're going to keep the red line and the green line, and what we're going to do is we're going to target them as our stop loss and take profit, and then we can validate if it's realistic or not. So we have the rectangle. We'll click here, and then we'll set the range of 3,500 from the current price that we have right now, and we're going to make it green to remember that this is our profit area. We're going to do the same thing here. Oop, I think it disappeared. We're going to do the same thing here and place also the range, which will be between the entry 3338 to 3,120. This one will make red. Great. Now we have two areas with profit and with loss that can help us understand the range that we are dealing with. Now, with this in mind, we would like to have some guidelines of what this position can benefit us. Okay, we need some indication where we're going to close it and how much we can gain or lose, so we don't just randomly click here buy and pray for the best. How can we do it? We wrote the name of the instrument. Next thing we're going to do is we're going to set the target. This is also, we said, a buy. Okay, so the target that we can set, let's make it $1,000. Okay, underneath I'm going to put the time range. And why do I need to think about the time range? Because I don't want to hold this position for too long to get to the profits. So if I don't think about a time in advance, and let's suppose that I make it in a year, $1,000 in a year, okay, comes down to, oh, I think that I lost the calculator we had. Oh, there we go. So if I'll go for $1,000 and it will be divided by a year, it's less than $100 a month. No, not so great. What if I make it in a month? It's $12,000 a month, and that's not bad. What about if we make it per week? Per week can be great, but might be too aggressive since our balance is only 10,000. So I think 1 week is quite fine, since it's on average it's 4,000 a month. The next thing I will think about will be the movements. Why do we need the movements? Because we're trading CFDs, contract for difference. So this position, when I'm buying, I'm not going to keep it forever, right? I want to keep it until I can make what I want to make, and then I intend to close it at some point in the future, right? So I want to close it when I am happy with the amount that I'm making. So I need to know how far away this point is going to be. I can target 3,500 is my take profit. We'll place it 3,500. And the stop loss, maybe we'll make it 3,120. Okay. And now we also going to automate the entry. And instead of entering now, I want to enter a little bit lower. So maybe make it 3,250. Let's see where is at. Maybe a little higher. Make it 265. Yeah, 265 is fine. So we'll make it 3,265. Maybe, yeah, that's fine. We're gonna put it in white. No, that's not too good. Maybe we'll make it a little higher. A little higher, a little higher. Okay, the reason that I'm doing that, if we'll expand the chart, is we can see this is a week, right? So we've got this week, we've got previous week, which this price triggered. We've got 2 weeks ago, which this price also was triggered, and 3 weeks ago. So this makes me feel a bit safer in case gold still has room to turn around, not to get tangled. Okay, the point in doing this is to be able to catch the reversal. Okay, it's a little, there we go. To catch the reversal as we're looking at here, and we can see that if we buy in here, it still has some way to go down. So I want to catch the reversal while it's turning around, okay, instead of doing it in here to close, to enjoy that difference here. Okay, so we've got the entry, the entry is 3,250. We've got take profit based on resistance, and we've got stop loss based on support. Okay, great. The take profit that we choose was hold on, 3,500, and 3,120 was the other way around. That's the value we've got at the bottom. Okay, great. So we're gonna now see if those levels are too far away from where we are. Of course, we can immediately see that those levels are very far away. So we're looking at weekly candles, and we can see that the last time that it's been there was definitely not a week ago. Okay, same apply with the resistance. Okay, so targeting those levels doesn't mean that I'm going to use them. I'm just targeting them as reference, and now we're going to apply an indicator that will help us assess if it's realistic or not. Okay, so one way to do this is, as I've explained, is to look at the size and the shape of the candles, and we can immediately see that if we'll compare the size of this candle and we'll look at the value in here, this could typically take 2 or 3 weeks. Okay, we could also look at the levels that we see in here, and we could subtract the differences to know what happened last week. The problem with that, even if we accumulate the numbers from last week, is 1 week doesn't mean anything, okay? We can right away see that each candle here is different in size and it's different in shape. Therefore, accumulating one candle doesn't give us anything. What we need to do is we need to maybe have several candles or a good bunch of candles to have an average. So for that, we can have an indicator that's called average true range that does exactly that. And now we can just choose how far away we want to go to withdraw the average from. So now it's 14, but I don't want to go back 14 weeks. I want to go back maybe half, or maybe a month and a half. This way I select the length, I place it at 6, and I can change the ATR to be in a different color and click save. Now we know that the typical movement, the average movement for gold based on the past week, month and a half is $116. Great. Let's see how far away are we from the entry, and then we'll see. Just a second. Our calculator, there we go, is how far away are we from the entry. Okay, so in here, let's see. What we can do is we can take the entry where we want to enter, and we're going to subtract the take profit and the stop loss. So in here, we see that we are how far away? Let's see, $250 away. Okay. Okay, and in here, this will be $380 away. Great. Great. Now, if we compare it with the average, okay, so we'll just write here ATR equals 116 based on 6 weeks. Okay, great. Now, if the average is only 116 and both of our targets are much more than double than that, okay, can we get to the goal price in a single week? What do you think, guys? We already know that it's more than double, right? We already know. We see the difference here, 250. This is how far away are we, okay? So this is the green area. The green area is $116 away, and the red area is $380 away. So can we get it in a single week, or we need more than a single week? Who knows? Anyone knows the answer for that? Correct. 2 to 3 weeks. Thank you, Gabriel. So 2 to 3 weeks. Why 2 to 3 weeks? Why? Because the average, okay, is only 116. So if I targeted this so far away, then I know that for that to happen in a week is much more than the average. So it's a bit far away. What I can do is I can adjust maybe the take profit and the stop loss to be in my range. So if the range is 100, what I can do is I can maybe increase from our entry by 100, right? And I can also do the same thing the other way around. This way I know that I have my values are, just a second, my values are realistic. Okay, like this will be our entry. This will be the new line for the stop loss. So like that. In here, we're also going to change. I hope that you guys know that what I'm doing with the lines is not mandatory for you to use. This is my own technique to help emphasize the profit and loss area, since we are in a webinar, but you don't have to do that in your own trades. Okay, but for me it helps me show you. So let's break down the scenario. Just a second. Okay. If we break down the scenario, we see that we are $100 away on both, and we can make $100. The issue here is that we wanted to make $1,000 and not $100. So the next thing we would like to fix is how many units do we need to buy to make $100 with $100 per ounce? The answer for that, guys, is very simple. What we need to do here is very simple. We can divide the target by the movements, right? Target divided by movements equals units. Therefore, if we divide 1,000 by 100, okay, and we increase here, we click once, we click again and again and again until we see here 10, okay? And as we can see, if we do it with a calculator, this is exactly what we get. Okay, and it matches perfectly what we wanted to make. Great. Now in this scenario, it's very, very simple. So this turns to $1,000 possible profit. And in here, same thing, but the other way around. So we've got a ratio of 1 to 1. So to recap, in the beginning, what we had is just a general trend. We looked at weeks, we looked at it like this, we roughly placed the lines, we had some lines here. Initially, we targeted much different levels. This was here, and that was here, 3,125. And we can see that this is pretty far away. Okay, afterwards we added the ATR. Thanks to the ATR, it helped us measure what is the average true range, and we noticed that the average movement is only 116. So to target the take profit to be $200 away or the stop loss $380 away, this could have been too far-fetched. So after we've analyzed roughly the trend and we've placed those lines, we validated them with the indicator. After we validated them with the indicator, we choose new stop loss and take profit, which is in this range, which is $100. Okay, and on top of that, the last thing we did was we increased the lot size, because initially it was like this, and when it was like this, we could have made $100 or lose $100, but since our target is 1,000, we needed to increase from 1 to 10. And now we do get the same value. Now, what if we would wanted to, for instance, reduce this ratio instead of 1 to 1 to 1 to 4, okay, or even 1 to half? So let's suppose we would like to have we would like to make the possible loss, we'll make it 500. Yeah. So how can this be done? This can be done very easily. The possible profit and the possible loss are a calculation of movements times units equals possible profit or loss. So if we multiply the 100 that we have and we multiply that by the 10 units that we have 1,000, right? But if we want to get to 500, so we need half of that. What we can easily do is we can take the movements divided by half, divided by whatever amount we want, but in this case by half. And then instead of 100, we only need 50, right? So instead of being $100 away from the entry, we can all see, right? This is simple to see. 3,250. This is our entry, and our stop loss currently is $100 away. Okay, it's $100 away. But if we make it 50, if we push it upwards, that means that we have less of the price difference, less. So what do we get? We get half of the, just a second, half of the possible loss. This way, our ratio now changed from 1 to 1 to 1 to half, and that is just great. Of course, I'm not referring to if it's great in terms of strategy, but it's great because this is what we wanted to achieve. Now, the last thing that I want to show you before we, for now, will be the margin impact. What is the margin impact? So primarily, we saw the general trend. Afterwards, we've placed the lines. After we've placed the lines, we validated them with the indicator. After we validated them with the indicator, we've made the necessary modification to match to the target. When we have done that, we saw that the ratio was 1 to 1, and now recently fixed the ratio to be 1 to half. The last thing we need is to validate if this position is, if we can take the position, if we have enough capital to take the position, right? Otherwise, all of that, it doesn't give us anything. Let's see, do you have a question here? Can you move the chart to the left? Yes, of course. We click and move it to the left. Oh, you mean to the left? No, to the left, no. To see to the left, not in here. You can do, but not in here. So how can we validate this? We can take the position that we have enough capital. So we have something called price per unit. This is how much 1 ounce of gold cost. At the moment, 3337 or 6, but I have a feeling it might get to 7 or 5, like this. Okay, and then we have the number of units, which is currently 10. So number of units is 10. And if we go price per unit times number of units, we get the value. For people who are using the web trader, it's not necessary to do this calculation. Why? Because the value is already displayed. But in MT4 and MT5, this calculation is very useful. In this case, we also have leverage. What does that mean? Leverage multiplies buying and selling. So instead of the 10,000 that I have an ability of 10 times more. So it's multiplying buying and selling and giving us the ability to acquire more units with the same balance. Since we are multiplied by 20, so this is 1 to 20, we can, with the same logic, divide the value by the leverage. And if we do that, we get the margin impact. The margin impact is basically the required amount for you to open the position. So we're going to put here margin impact or margin requirement equals necessary amount to open the position. Okay, great. Now we know we have available $10,000, and this requires only 1,667. So again, how did we get to that? We simply took the value and we divided by the leverage, and this is what we get. Okay, since we are multiplied by 20, we can basically divide the total sum by 20, and this is how we get. Guys, is there any questions about anything that I said so far in the last few minutes? I'm willing to assist. If not, we are done for today. I hope that during this webinar you are able to pick up some practical things that I said today. I would like to thank you all for participating and remind you that the recording will be uploaded to our YouTube channel for you to watch again. Until then, you can join us tomorrow with a live Q&A. Until then, I wish you all a fruitful week, best of luck with trading, and have a good day.